The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the February 8th wonderful Wednesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day. Let's make sure that you and I, that we do everything possible to have an extraordinary Wednesday. Of course, the easiest way to do that is to always remember what's talked about is a dream. What's envisioned? Well, what's envisioned is downright exciting. Of course, what's planned becomes possible. What is scheduled is real. And I really want to thank you for spending your time with me this morning. I am grateful for your presence here, and I'm here to serve you. So feel free to pick up the phone, dial on in at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. Remember, if you've got a question, guess what? Somebody else, and it's more than just somebody else. It's many people have got that exact same question. They're just a little bit anxious, go through that anxiety of picking up the phone to call into a radio talk show. I get that. I even have that anxiousness, but so just do it. It's a wall that you can overcome out there. Nothing like overcoming walls out there. So don't do it for yourself. Don't do it for me. Do it for somebody else out there. And that way you get that you get to tick off that random act of kindness out there. This is, of course, Tiger Financials Network. It's Wonderful Wednesday. I'm Steve Rhodes. Welcome to the show. As we begin the hour, you've got the Dow off 26 points right now. She's trading at 18,021. S&P down 4 points at 2,096. Composite off 3 points. Russell down a couple of bucks. DAX up 51. FTSE's down 16, just testing the breakout of its long-term consolidation pattern out there, still above that level. You've got gold back 250. Silver is flat this morning. Light sweet crude is down 56 cents. Leading the charge, the upside, it's our man Zillow. Z is the ticker symbol. That's up about 8.5%, up $9 and change. Jack in the box is out of the box, up 6% this morning, up $5. Flowserve up 6.5%, up $3.90. CyberX software up 4.5%. Precision cast parts up about $2.66. Granger WW up $2.22. That's that great show, Room 222 out there. I can't remember the cast, the names of the cast, because that goes back quite a ways ago, but I'm sure some of you watched that show. Fossil Group, FOSL, that's the lead the charge, the downside up $17, nearly 18%. Varonis Systems down 18% as well. That's off $6.70. Valmont Industries down 5%, off $6. CF Industries down 2% or $6. Garmin up 9% or $5 out there. Activist PLC down 1.4% off about 4. Dormant Products off at 7%, down 3%. So a number of equities to the downside percentage-wise. Now, let's go take a look and see what does all of this mean. Of course, we like to start off this hour by taking a look at the ETF structure. So we'll go take a look at the QQQ ETF series out here. As we take a look at the Qs, what do we know about the Qs? The Qs are up and over. Their swing point from November 28th. That had 17 million shares. The problem is we don't know what that 17 million shares really is, because November 28th was the Friday after Thanksgiving, a holiday light trading volume out there. Nonetheless, it's up and over that level with volume, so to speak. 29 million shares, and that was on February 13th. Yesterday, though, very interesting, as Colonel Klink would say. I believe it's Colonel Klink, he would say that. Very interesting, because it was 17.6 million shares. And as far as I know, yesterday was not a holiday. Yeah, it was snowing somewhere, that's for sure, but it was not a holiday out there, so very light volume. Nonetheless, as long as the Qs stay above 106.25, you've got a 6-point consolidation move. That's the consolidation, taking it back to the breakout that began on October 31st out there. That was the day that the Japanese finance minister said, print away, my friends. And hey, the guys that are in charge of the pension fund out there, they changed their rules. Go start investing elsewhere. You don't have to stay here in Japan to do that. Of course, I don't know. That market has been doing pretty well, so I'm not sure why you'd want to start moving elsewhere. Nonetheless, that was the deal. So as long as price is above 106 and a quarter, that says there's the potential for price to move up to about the 112-ish level. That is your measured move of a consolidated breakout up here. That's what's going on inside of the QQQ ETF structure. If we go take a look at the Russell 2000, the IWM, what did it do yesterday? Well, it got above its swing point from December 31st. That high out there was 121.41. The volume there was 35 million shares. Of course, that was a holiday as well. But that 35 million shares was taken over with only 17 million shares yesterday. Right now, you're at 121.36. So you're back inside the lower part of that range, meaning that the breakout, which was with light volume, wasn't necessarily real. Is it the IWM? Where we get our piece of information from with regard to what the market's next move is, just like as we take a look at the FTSE, which we do that during the first hour out here. Not that we can't go look at it, but no reason to go back and harp on that. If we take a look at a weekly chart here for the IWM, what we can see out here is the long-term consolidation pattern that in essence is in play. Now, what do we know about that long-term consolidation pattern? Well, one of the things that we know is that price is actually above that level. That's the high from March the 3rd. The week that began March the 3rd, and that's at 120.58. So really, in order for the IWM to say that the breakout is falsaroonie, there was 270 million shares on that week from March the 3rd. First time up in testing was with 146 million. The next time up in testing was with 133, and then Wunderbar last week up with 133 as well. So we've got light volume on the weekly, light volume on the daily. Nonetheless, as long as price stays above 120.58, that says the breakout could be real. How real is that? You're talking about 103.60 to 120.58. You're talking about a 17-point move out there. 17 on top of 120 says 137. Coincidentally, the actual longer-term monthly consolidation breakout inside of the Russell 2000 says it wants to get up to 1350. So we want to keep paying attention to the Russell 2000, the IWM. Let's go take a look at the SPY. Let's go see if we can take a look and say, I SPY. Let's take a look at the daily charts out here inside of the SPY. And the daily charts of the SPY, what do we know? We know that the price is up and over the swing point. I'm not using this candle session from December 18th. Can't get anybody to change it. There were a few trades that somehow fired off at the 212.97. Somebody wasn't watching the switch out there, and so therefore, with regard to the market, they're leaving that as the intra-session high out here. I had written it down. I looked up the trades like the following day, and I wrote down on a pad of paper. I meant to call in, figuring they were going to change it, I didn't get around to calling until about a week or so, maybe 10 days later, when I got just so frustrated and said, well, my goodness, would you guys just fix the trading session from December 18th? That's when I found out we'd like to. Mr. Rhodes, you're not the first to call about that, but nobody's there were actually some trades that fired off, and nobody's changing it. So I'm just going to have to use as my swing point the December 29th level. That December 29th high is 208.97. You're trading at 209.56 as we speak right now. If we look at the candle session inside the SPYs, just an inside day. What's an inside day mean? If the price were to continue and close right here, inside day says the trend you just came from continues. What's that trend? That trend at this stage is a breakout. This has got a consolidation-oriented pattern from 197 to 208. So you got about an 11-point consolidation. If the SPYs can stay above 208.97, you're looking at about 219 potentially. What do we know about the SPYs on the daily basis? Well, 1229 was 79 million. You broke above with 93 million. So in theory, you've got a breakout on February 13th above that level. Of course, that reminds me of the joke about the difference between theory and reality. Many of you might know that joke, and many of you might know that I really can't tell that joke honestly as much as I'd like to at 10:17 a.m. out there. But nonetheless, it is, unless I try to figure out some way to clean it up out there, and I don't want to have to do that on the fly. But in theory, we've got a breakout. In reality, if price gets back inside there, we do not. And that's as far as I'll go with that joke out there. Let's go take a look at the Dow Diamonds, the DIA. That's trading down 42 cents, 500,000 shares as we speak right now. The Diamonds still unable to get up and over its wall. It has run into a brick wall, so to speak. The December 26 timeframe out there, that December 26 timeframe has got 1.9 million shares. What did we do yesterday? Hey, 2.8 million shares. Not too shabby, not too flabby out here. 2.5 million shares on December 29th to the downside. So, it's running now. The high yesterday was 180.70. The actual high it needs to take out is 180.71. What does that usually mean? Typically, when you come into a swing point and you're doing it with volume, which is what the diamonds did yesterday, and you stop 1 penny below it, usually you're getting ready to blow right through that. However, in this case here, that's not what we have seen. In fact, in the case of the Dow out here, if it closes below 180.19 or 180.18 as we speak right now, it'll be back inside the lower part of its range, so to speak, below the candle session from December 26th. But the key would be it would need to close today with less than 1.9 million shares below 180.19. If it closes below 180.19 and it does with more than 1.9 million shares, it says you're still pushing into that swing point with volume, and voila, you likely will go test that 180.71 level. That's what's going on inside of the Dow Diamonds. If we go check out the VIX index out here, the VIX index is trading up at the 1643 level. That is still below the 50-day exponential moving average, which is priced out at 1729. So long as price is below 1729, you got a market that'll move sideways to higher. You get above 1729 and it will be look out below. Can you say timber? The question is, are they really going to be big trees or are they going to be small trees? Are they just going to be branches that fall because it's nothing more than a windstorm out there? I don't know. But time will tell. We'll be back in just a moment, folks. Right now we got the Dow. She is off about 52 points. We'll be right back, folks. Follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 57 points right now. S&P down about 8. Composite off 13. Let's go check in on the summation indices out here. Summation index for three of our indices. Let's take a look at the Dow. So as you take a look at the Dow right now, the summation there, the price oscillator down around 0.84. So still above the zero line. As long as it remains above the zero line, says that the buyers are still in control of the market out here. If we see a dip below that level today, and I can't tell you exactly how many, I can't tell you exactly whether we will or we won't. I won't know until 4 o'clock, maybe 3:59 at the earliest out here. I won't know whether or not the Dow remains in the hands of the buyers. I know right now it is in the hands of the buyers out here. We got to look a little bit of a bearish engulfing candle as we speak right now. We haven't seen any kind of a bearish reversal signal since the, well, really for quite a while out here. You really haven't seen any bearish reversal signal since the highs back here on December the 26th. You saw that take place on December 30th. But right now, the Dow still in bullish formation when we take a look at its summation index. Let's take a look at the NASDAQ composite, a little bit wider swath of the market. Wow, this is also in bullish formation out here. So you're seeing nothing more than your vanilla-oriented retracement and pullback inside of the markets. So long as its price oscillator remains above the zero line, which it is right now, it's priced at 27.60 and change out here. As long as it's above zero, it says that the buyers are still in control. Inside of the composite is up and above the resistance from November 28th high. That was 48.10 out there. It's been in a bit of a consolidation as well. It's consolidating pattern between 45.50 and 48 in 48.15 out there. So basically, we'll just simply call it 40. We'll call it a little under a 300-point move, 275, something like that. So you could add 275 to 48.14, and that is the price projection until price gets back inside the lower part of that range. Does it really need to get inside the lower part of the range in order for sellers to take control? The answer there is no. It just at least at a minimum needs sellers to move their price oscillator down below the zero line. You need enough net declining issues in order for that to take care. Let's go look at the even wider swath of the market, and that is the New York Stock Exchange. If we take a look at the NYSE right now, the price oscillator just pushing down towards the zero line. Still a plus 5.5 out there. The New York Stock Exchange, what we want to be watching today, if we see that price oscillator dip below zero, then the wider swath of the marketplace will be saying, be careful. Caveat emptor, let the buyer beware would really be its message out there. Again, we won't know what the results are of these price oscillators until the end of the trading session. It's much like take a look at today's candle and even calling it anything, because the reality is until the day is complete, it ain't nothing out there. And of course, I know that ain't nothing is not really very good grammar out there, but hey, I'm out of grade school, I'm out of college, and so you know what I mean. So that's what's going on inside of those four key areas for us to be focused on and paying attention to. If we go take a look at that Euro Japanese yen, get a feel for what it's doing here this morning. Right now pulling back just a bit, but still just moving sideways out here. So not really doing a whole heck of a lot. That's not the case inside of the Great British Pound. The Great British Pound versus the U.S. dollar index, that continues to move higher. Where is this headed to? I'd have to say it's likely headed to 1.58. That happens to be a 0.382 retracement all the way from the high back here on July 16, 2014 to the low that was put in on January 23rd, 2015. It's broken through its channel line, did it with conviction. We first broke through it, came back, tested it, then broke through it with some conviction. So the Great British Pound wants higher price, a little bit more expensive for you to order your Guinness, maybe your black and tan. Of course, that is nothing but a Bass and a combination of Guinness Stout out there, and that is a good beer combination. To make sure you drink it at room temperature. Don't be spoiling those beers out there. Let's take a look at Goldilocks. What do we know about gold out here? We take a look at gold. Gold has pretty close, but no cigar out here. Very close to getting down to the 0.618 retracement level. And that's at a price point of $11.98 out here. I'm going to go on a limb. Of course, it's probably a tender limb out here. And I'm going to say that gold is going lower. Gold is going much lower. So the 0.618 retracement level, this right now is nothing more than just a resting spot out here. Of course, we saw that initiation move inside of gold with that full moon. We don't have the next full moon until, when is the next full moon out here? Is it March 6th? It's probably March 6th or March 7th out there. March 6th or March 7th, maybe I'll change my tune out here, but otherwise I think the shiny metal is headed lower. This is Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan, hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 47 right now. S&P is down 5. Composites off $4. Now, yesterday during the first hour, yesterday, I did it just real briefly during the first hour today. Yesterday, I talked about functional fixedness out there. Now, yesterday, yesterday I showed the picture of I think I can't remember. When you Google "ugly woman, beautiful woman," you'll see the same image that I used out there, and it's a great image. And the reason why I use it is because, look, images. You and I, we're all visual, and so and how I relate it. I tie everything together. You should tie everything together as well. And it's really about being able to take a look at one image and being able to see both sides of it. See, when you're trading and investing, or when you're just simply communicating in life, you've got to be able to see both sides of the story. I don't care how thin they slice it, folks, and you know this to be true. I don't care how thin you slice it. There's always two sides to a piece of bread. Am I right or am I right? Exactly. So that being the case, whenever you enter a trade out there, it means you really have to know both sides of that bread. In fact, if you don't know both sides of that bread, I'm not really sure how it is that you actually take a trade, because how else is it that you're going to really be able to do reward to risk out there? There's all different types of ways to do that, but you just got to make sure that you do that. If you don't, and you're a bull, and all you're looking for is the bullish outlook, you're going to totally get pummeled someday out there. I don't want that to happen. You don't want it to happen either. Likewise, if you're a bear and that's all that you're focused on, that's all you're going to see. That was really the image behind what we showed, what I showed yesterday. But there's a guy named Charles Dunker. I think it's Duncker. I think that's the name. And this was back in the 50s. He's the one that actually termed it functional fixedness. Now, let me show you this. I'll put this up. For those of you that have been to a couple of my workshops, I haven't shown this for a couple of years, at least I don't believe. But it's this slide right here. Now, Dunker, it's in his car with a K. He actually, what he did was he gave, this is a traditional test. It's basically cognitive, as a cognitive study, Gestalt psychology, if you really want to get into it. I'm not going to. What he basically did was he gave people basically three objects. He gave them a pack of matches, if you're watching this on Tiger TV. If not, you can visualize this. If I gave you a pack of matches, a box full of tacks, and a candle, and I said, your goal is to be able to stick the candle to the wall, light it and light the candle so that when you light the candle, the wax doesn't, hit the bottom of the table. Just set it down on a table. Now, he gave those three things. This was some other guys took this to some students out at Stanford. Some very sophisticated, high-educated students out there. Now, he gave this to folks, and when he gave it to folks, people started taking a look at it. And, of course, the first thing that most people come up with when they take a look at that is, Steve-O, I know the answer to that. I'm going to take the candle out. I'm going to take the candle. I'm going to take a thumbtack out. I'm going to stick it in the candle, stick it in the wall, and then go ahead and light it. Now, first of all, the thumbtack's probably not large enough to do that. But even if you did do that and you lit it, guess what? The wax is still going to come down and hit the table. There's others that would say, hey, I know what I'm going to do. I'm going to take that book of matches. I'm going to go ahead and light the side of the candle, just in case that thumbtack is just simply too small. And I'm going to go ahead and I'm going to light the candle and I'm going to melt it and use it as wax and fix that to the wall. And then go ahead and light it. Another smart idea out there. But guess what? That one also doesn't work out there. You see, the whole thing is you get fixated on just taking a look at this. It would be like looking at a stock chart and always looking at it, not cleaning it up and coming back and going ahead and applying a new information to it. You see, what happened is if we took this versus you could take just simply a handful of grade school students and you gave them this, which is a box, which was the box for the thumbtacks, and then the thumbtacks on the top of the table, and then the candle, and then a book of matches. Guess how quickly they're able to solve the problem? Just like that. Because just like that, most of you have already figured out that the solution would easily be then. It's the same things. It's the same components. Why is it you've got buyers? Why is it that you've got sellers? Why is it that you always have two sides to every piece of bread that you cut out there? It's pretty simple. That's right. You take the box, you thumbtack the box to the wall, you stand the candle up, and then you light it, and that is how you solve the problem. Folks, this is nothing more than the way that you and I need to take a look at the markets each and every day. You've got to think outside of the box. Jay says you got to think inside of the box, and sometimes you got to think inside of the box as well out there. But what you really need to do, no matter what it is, no matter what, and this, I'm really not talking to just folks about the stock market, right? I'm talking about just simply functional fixedness, but in the stock market, we get to see it all the time out there. And so use this. It's great tools out there. And metaphors mean everything in life. So let's go out to Lou in Nashua, New Hampshire. Lou, thanks for calling. Thanks for holding. Have you dug out of all that snow up there?
Not really.
Not really. How much snow did you get, and have you ever seen that much snow in your lifetime?
Never. We're
Not
shoveling off roofs now.
Yeah. Now that's a dangerous thing, shoveling off a roof.
It is. Yeah.
That's dangerous. And what's the outlook? I haven't really been paying much attention.
They say more snow's coming.
More snow.
Weekend. Yeah. There's no place to put it.
Wow. That's amazing. That is amazing. Well, be safe out there. I saw one video with a cameraman, or he had a camera set up and a car just simply lost control, spun out towards the camera out there. You probably saw that as well. I used to live up in the Detroit area, and there is nothing worse than hitting a piece of ice because you don't see it. And then once you hit it, you're kind of screwed out there. But you're taking a look at natural gas. Now, do you use natural gas for heating at your house up there in the Northeast?
No, unfortunately, I don't.
You're using electric, huh?
Oil heat.
Oil heat. Okay. Hey, well, good. Oil's down in price out there, so not too bad. Now, are you long natural gas? Are you short natural gas? What is it you're trying to do?
I am nothing.
Nothing.
Thought maybe going long, but
I like the nothing approach out there, Lou. Yeah. I really do like the nothing approach when it comes to natural gas. If we take a look at it, I'll give you the reasons to be long natural gas. We'll go take a look at those out here. And so the reasons that you could consider being long, I'm going to switch to a different tool out here, daily indexes. I'll put up a continuous contract for natural gas. Now, the reason that I'm doing that is just simply I've got more data. But if I put that up on my screen out here, the most bullish thing that I can tell you about natural gas is that it formed a seventh wave to the downside using our Chapman wave counts, and that was back on February the 6th. Oftentimes, now, if you're going to go long, what you'd want to do is you'd most certainly want to close out any trade where you see a close below, where you see a tick below that February 6th area. That's the only bullish thing that I can find inside of the charts as I take a look at natural gas out here. I don't see much in the way of really any key reversal signals out here. I just see that seventh wave pattern. What I see out here that would be concerning to me, Lou, is just simply the normal pattern. And that normal pattern inside of natural gas says this. It says that natural gas is supposed to spike higher, which in essence it's really done. It was supposed to do that right around the February 14th timeframe, which in essence it's really done. And it's supposed to make some type of a peak or high right around February 25th out here. That's this peak. And then it's supposed to pull all the way back down to the bottom of these lows and just really consolidate. And with as cold as it's been, I suppose, up in the Northeast, I don't have the temperatures overall, what things are like across the country out here. The most bullish thing I can say is if you're going to go long natural gas, which is fine, just make sure that then if you're using a UNG or whatever it is, that if you get one tick below that low of February 6th, it's really a good chance that you're really wrong on the trade out there. It's just not moving much. I just don't see it in the trade out here.
Okay.
Okay.
Thank you.
You bet. That was Lou in Nashua dealing with amazing amounts of snow out there. And I do not know whether this seasonal pattern inside of natural gas is going to work or not. What I do know, it's kind of like having functional fixedness. If we knew that this pattern was out here, and we were trying to do an analog to see how price is working, I would just simply start off and take a look at the January timeframe and take a look at the high out here in January and the mere fact that this thing moved lower into February. And then I'd come back and I would say, well, let's go find January outside in natural gas. Where are we at in January in natural gas out here? And in January natural gas, here we are in the middle part of January. Here we are in the beginning of January, and prices basically moved lower. So I'd have to say, to ignore that seasonal stock chart out there doesn't make a whole lot of sense. And we haven't seen any real significant sign of strength here off the bottom. That does not mean that it hasn't found a low. What I did was I gave each of you that are listening out here about as bullish a case as I could come up with, which is that seventh inning stretch pattern to the downside in this case. So the upside or the downside, they are worth paying attention to, and they become easy to trade. But that took place quite a while ago. That was on February the 6th out there. That is on natural gas out there. If we go take a look at, and I'm going to switch back to some other areas out here. So let me switch back to, yes, trading right here. Okay, we'll switch back there. Now, if we take a look at light sweet crude on the other side out here, if we take a look at light sweet crude and go see what it's doing, this looks a whole lot better than natural gas. What do I mean it looks a whole lot better than natural gas? Well, number one, you got nice big bullish reversal signal off of the low out here from January 29th. Here you've got a big, huge evening star, morning star reversal pattern out here. So you got a bullish engulfing, you've got a morning star pattern that says that low out here of January 29th is important. Any move below that, 43.58, and that is a problem. We've seen a couple of signs of strength inside of light sweet crude. My belief with regard to light sweet crude, moving down from the highs back in July of last year. I know everybody's talking about it being the shale, being the lack of demand, and not that some of that stuff isn't out there. My belief is this whole thing was totally engineered, and this was engineered. This is called the Putin put out here, and the way that the U.S., along with its different allies across the world out here, and that includes the folks over in Saudi Arabia, everybody got together, and they wanted to go ahead and put as much pressure on Putin as they could. And the easiest way to do that was to totally demolish the one single resource that he had out there, and that was crude oil. And I believe that had more to do with anything in seeing the price of crude move from the $100 down into this level out there. For those of you, you might remember I even talked about it with a couple of listeners on the air back in the June timeframe out here, and so we were talking about it before oil, light sweet crude, continued moving lower out here. So let's just say that theory is right. I can't prove that theory. In fact, there's basically nobody that I know of that really reports on that. So that is nothing more than a Steve theory out here, which really can't be provable. However, What I'll throw out to you is what the Ukraine and is starting to pull back some of its forces. Supposedly they've got a ceasefire, whatever in fact that means. We'll know out here, and then we've started to see light sweet crude come off of the bottom. If these lows from January 29th do not get taken out, and we see price move up, and where can price move up to? Like the 65, 67, 68 area is nothing more than just a 0.382 retracement, $65 and change. I don't even know if I've grabbed the right swing points out there exactly, but right around that $65 area. That, of course, that would be nothing with regard to its move out here. If we see light sweet crude break through, now I wouldn't be taking a long trade right now on light sweet crude, but if it does break through that descending price channel, then you will have seen a pretty significant breakout up there. So, that's my theory on it. I'm sticking to it because, hey, what's the cost of sticking to it? When you're trading and investing, just make sure you have stops out in the marketplace, no matter what it is that you are doing. So we'll find out whether or not, years from now, hopefully we're around, you and I are around, we'll pass this down to our kids. Years from now, when the real story comes out, what is it that drove the price from the $100 level down to the lows on January 29th, and supposedly what we're going from the time period of June to January, that the supplies in the whole world totally shifted in that time period? I don't think so. I'm not even closely coming into buying off into that stuff. Hey, that's called not having functional fixedness. That's called thinking outside of the box, as far as I can see it. Okay, enough about that stuff. I don't want to be picked off for throwing out this little so-called conspiracy theory out there. So mum's the word. You heard it here at TFNN, but that's it. We're not talking about it anymore. Now let's go check out a couple of things here that are moving and grooving. Let's take a look at the upside. We got Zillow. Now, is that a buyout that's going on? Zillow completes the acquisition of Trulia out here. Well, they completed the acquisition. This thing has taken off, of course. Zillow broke through its descending trend line out here. You think these trend lines, these channel lines aren't muy importante? That's why we're going to be watching light sweet crude as well. Well, in the case of Zillow, it broke through there on February 12th with 3 million shares. It's got another nice day going today. So far, 1.6 million shares. That's yesterday. It did 6.2 million shares. Right now, you've got Zillow moving into its swing point, and it's doing it with volume. That swing point had pretty decent volume. That was November 19th. That was 3.6 million shares. You're moving into it. It says the high there ought to be tested. 127.89. Steve Rhodes, TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 38, S&P down 5, Composites down $1.67, Russell's off $1.60 as we speak right now. I had a question come in asking me about the price oscillator, the summation index. We'll go back and take a look at those charts here right now. Now, mathematically, let me try to simplify this because it's relatively complicated. What I do each day is I have a spreadsheet. That spreadsheet's got a lot of different data in there. That spreadsheet allows me to understand where the market might be at with regard to a Zweig indicator. Sometimes I've got a spreadsheet that takes a look at major volume of advancing issues to declining issues or vice versa. There I'm always looking for bottoms are put in when you see like a 15-to-1 ratio. I'm also looking at the price oscillators now. Luckily, with regard to the e-signal platform and the guys over at Traders Formula Consulting, they've built the price oscillator and the summation index for the New York Stock Exchange, for the composite, for the Dow out here that way. And what it means is that the zero line down along the bottom, that's really your tug of war line between bulls and bears out there. As long as the price oscillator is above the zero line, that says that the bulls or the buyers basically are in control. Now, the way that the summation index and these oscillators are calculated, you're looking at what's referred to as the 5% and the 10% trend out there. What you know of as the 19 and the 39-day exponential moving averages out there. And then you're taking a look at that as it relates to advancing minus declining issues. So it's a lot of math out there, and but it's a great tool. Now, it's a tool that is also a little bit of a lagging indicator. What I mean by that is that it's not going to allow you to call a top or call a it's going to allow you to call top and a bottom. It's not going to allow you to sell the top tick or buy the bottom tick. with regard to the way that it turns, with regard to the way that the math that the math actually works out. But it is an excellent tool to help us understand that a change in trend has taken place. It doesn't tell you for how long that change in trend is going to continue, but it is a great tool. What do we know about the New York Stock Exchange right now at 10:56 a.m.? Still in possession of the buyers. What do we know about the composite, the NASDAQ composite? Absolutely in possession of the buyers. What do we know about the Dow? Absolutely still in possession of the buyers out here. All that we're seeing intraday is nothing more than just simply the intraday shuffle out here. If we take a look at the intraday shuffle, and we go take a look at its 30-minute chart out here inside of the ES Mini. The ES Mini has got some pretty decent support at 2,087. 2,087 has not even been hit as we speak right now. It's got really good support at the 2,082. Well, I'd say no, 2,087 is really good, strong support inside of the ES Mini, inside of the S&P futures contract. The VIX index also below the 50-day exponential moving average. So as we speak right now, ain't no top in place as we speak at 10:57, but that could always change. That could change at, it probably changes about 11:06 when our man Basil Chapman comes up next. Now, I believe Basil has a workshop. I know he does. Is it tomorrow night? I think it's tomorrow night, Thursday night. Come on over to the homepage of TFNN.com. You'll see all the details out there. It's going to be an excellent workshop. I would never ask you to do something that I'm not going to do. So I'm going to be in attendance. I want to hear what Basil has to say, as should you. So getting into it is a real easy thing. So come on over to the homepage of TFNN.com. It's February 19th, so it is tomorrow night. So that's a wonderful thing. I believe 6:30 to 7:30. So stay tuned, folks. It is Wonderful Wednesday. We got Basil. Now I don't believe we've got Larry here today, but we do have Daryl Martin. We've got David White, Tom O'Brien show. So have a wonderful Wednesday, folks. I look forward to catching back up with you tomorrow morning. Don't forget functional fixedness. Just see things differently. Think different. A lot of great people think differently. You should too. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.